Alrighty, welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage. Funny, I'm your host, Harvey Freed. There's Harry Glanz.
What a great intro. What a great song, huh?
Keep it a little
Bob
local.
Seger, right?
Bobby's the best.
Love Bob.
Don't hear enough of Bob Seger.
Good morning. Listen, can never get enough Bob Seger or anything Detroit, but Harvey, let me say this to you. It's always good to be in the studio with you. I'm jacked up to be back in the studio. And who do we have today, Harvey?
We broadcast live with Kyle Lang, Remax Dream Properties out there in Northville. Hey, Kyle, what's up?
What's up, guys? Thanks for having me back.
Is Kyle one of the easiest guys to talk to, get along with? He's so smooth. He's, he's just a cool guy. He is. And bro, how old are you?
I'll be 30 this year.
Oh, gosh,
Happy belated birthday to my wife.
Where was I when I was 30, Harvey?
So.
You were at the office working. You were working. You're doing the same thing you're doing now.
Thank you. I appreciate that.
Kyle, you got a nice mellow way about you. I was always thinking, we got John Kolb. Hey, John Kolb, you're joining us too. Hey, John.
Hey, guys. How you doing today?
Somewhere in the middle of Michigan, somewhere in the middle of the state.
That's right. Up here, it's beautiful, blue skies, freezing, though, freezing.
Well, tell everybody where you are.
I'm in Gladwin.
There you go.
Gladwin, Michigan.
There you go. Is that Torch Lake?
No. It's about 25, 30 minutes away from Houghton Lake.
There you go. Okay, so that's where your place is, or you just vacationing some other places?
No, that's where my place is. I was working on the house a little bit, getting it ready for when everyone comes in town this summer.
Yeah, everybody out there, just so you know, John's worked with us for going on 25 years. And by the way, never been off to his place. It's okay.
You've never been there? No, they have a golf course near there.
Do they really?
Yeah, you could set that up.
Well, tell John.
We'll figure that out. Hey,
I'll have to check with the mayor.
Why don't you check that out for me?
Well, for all the listeners out there, you're listening to the Hardcore Mortgage Real Estate Business Show. We're in our 23rd year, second show of 2022 real estate market. Of course, it's never going to stop. As these interest rates, Kyle, have stayed low, will stay low, but they are climbing up. We'll get into that a little bit this afternoon. Home prices still climbing of lack of inventory, and that conversation continues. What do you see for 2022 that might be different, if anything?
Not a lot, right? I think right now, I think we're seeing a little bit more frustration from some home buyers just because of the lack of inventory. I think we're going to see that change, though. Our February 1 is what we like to call our new year. That's really when the spring market will get going, and we'll see a nice influx of properties hitting the market, hopefully starting February 1st.
Yeah, Harv, talking about that before the show, this year's starting off a little bit. It's a little bit different. And when I say different, it's different than 2020, of course, and different than last year. It seems to be getting off on just a little bit slower start. When I say slower start, people are coming back to work right now, right? So the holidays, you have that holiday lull. Society, we're always in that holiday lull. And then it's tough to get back, tough to get started. But I think it's going to start. I think you're going to start seeing things pick up. And as you said, you look at February 1st. We look at March 1st because all the applications that are taken now are going to close starting
March 1st.
March 1. Exactly. So, or a little bit before. But that's not a problem. But that's what we see. And I think that in talking about 2022, which we did on a podcast we did last week, it's going to be a different kind of year. Sales are going to be good. You still have a lot of buyers out there, right?
Well, and I think the biggest difference between last year and this year, I think the springs are going to be very comparable to each other. But I think the biggest difference between last year and this year, 2020, us agents, we were shut down for 6 weeks here in the state of Michigan.
Right.
So we really didn't get a holiday break. We just worked through the holidays and into the new year versus 2021 into 22. Everyone kind of got to take a step back, enjoy some time with their family, and we did get that typical break that we're used to seeing from years past. So I think this spring's going to be ultra competitive again.
Hey, John, I think that John Kolb, I want to get your opinion. We talked about it on the podcast. I think that's what's going on right now. I think people are just starting to settle back in and kind of just smooth it out.
Yeah, there's a lot of fear out there with Omicron and everything like that. So I think that's got us off to a slower start. But I'm very hopeful that when this peaks and starts to go trend down, like Kyle said, we'll start to see an influx in properties and get back to a little bit of normalcy. And it's just making sure that everybody's staying safe and healthy. But at the same point, you can't stop living. You got to keep doing what we're doing, making sure we're doing it smart, adapting to what's out there, and we'll get back to the business.
The buyers and sellers out there definitely really taking advantage of today's marketplace. Of course, if you're buying a home and you bought one last year, maybe it's up already 8%, 10%. The folks that bought homes back in 2016, 17, 18, they're seeing huge appreciation, 20 to 30, 40% appreciation. The only little hump out there probably, Kyle, is this lack of inventory. But then if you've already owned a house, it keeps driving up the prices in your neighborhood.
Well, yeah, and that's one thing that I remember when I was on the show. I think it was last spring. We talked about, and Harry brought it up. People are so worried about, I'm going to overbuy right now. It's like, if you own a house, you're going to oversell right now too. And I've told plenty of clients that. We actually had one client just a couple days ago. She texted one of our agents and said, the market is it's too high right now. I'm gonna hold off. I'm gonna hold off on waiting. And then we had the conversation with her of, listen, the market, it's not going down, right? If anything, if the prices are going to continue to increase, but then once those rates start to go up, right, then you're going to have even less buying power. So now the house that you're looking at for $225 that you think you're overpaying for, you can't even afford it anymore.
248-539-9797. We want you to join the show if you're looking to buy or sell a property. Kyle, of course, has tremendous success. His great office there in downtown Northville. He works all the 5 county areas. If you have any questions about buying or selling a house, definitely give us a call. 248-539-9797. One of the things, Harry, that we've had these not so good calls every now and then. We'll get someone to say, this market's a bubble. There's some crazy bubble out there. Well, little answer on that is foreclosures are at all-time lows. Of course, the government stepped in with the forbearance program. There's all sorts of programs out there. And the economy somehow is doing quite well because there's jobs. There's jobs available. People can work to pay their monthly payments.
So that was the difference then back in 2007, 8, 9, okay, when all this came crashing down. They talked about a bubble in 2005, 2006. Property values at that time were at all-time highs, and then it all came crumbling down. So that's history now. So what happens is if you don't learn from history, you're doomed to repeat it. You've all heard that. So what we've learned there aren't those crazy mortgage programs out there anymore, by the way, that we never did. The crazy option arm, pick your payment. Who picks their payment on a mortgage? Here's the payment. You make the payment. That's the end of it, right? You don't
It's amortized. You get it paid off.
Way, there are still companies out there. There's still a guy out there that he's on TV all the time. He's doing other things. So
I watch The Big Short once every couple of months just to kind of remind myself of that and say, this is just so crazy. How is this the real world back then?
It was the real world. And look, there's you got to be documented. Well documented to get a mortgage. You have to have good credit. You have to put a little bit of money down, although there are first-time home buyer programs. But there's a series of checks and balances now, Harvey and Kyle, that in the mortgage industry you got to go through, and it's way more compliant, and it's a lot better. Now, what does that mean for a borrower? It means for a borrower, they got to provide us the documentation. I mean, there's just no more wink and a nod, sign the papers, and you're done. It's not the way it works. So, look, things are different. Things have changed a lot. The however is that everything is more secure, more jobs, economy's going great, interest rates are really low, and you know what? Like Harvey said, the one thing, inventory.
Yep, absolutely.
Kyle, 87% of the folks out there, they have equity in their house. They're not walking away from anything, and who doesn't have equity?
All these foreclosures that are going to happen, these foreclosures.
What are they talking about?
If you're getting close to a foreclosure, I guarantee you have positive equity. Sell your house. Go rent, move into your parents. It doesn't matter. But there's so many avenues to avoid that foreclosure.
Right.
And it's going to keep this market churning.
Well, I like you. Actually, when you said that, the first thing that came to my mind, right, if you're in a sticky situation, if you can't get, a second job or something to cover the difference, what troubles might have hit your life. And again, sometimes we always say bad things happen to good people. All right, do the right thing. Contact an agent. You probably got a list of people even that are considering even renting maybe for another year or two. You fix up your house a little bit. Instead of losing it to the bank, you go ahead and rent it out.
Absolutely.
Build some equity that way. 248-539-9797. John Kolb, it makes me think about debt consolidation, families with all this equity, and I never liked the idea of using the house as a piggy bank. However, if you can improve your cash flow and maybe also drop the term on your mortgage, John, that's the way to go.
Yeah, absolutely. I mean, it's such a smart thing to do. It's like we talk about all the time. It's not about the rate. Stop thinking about the rate. It's about the numbers that you're coming out of pocket with each and every month. So you got to take a look at what you're paying on your monthly payment, what you're paying with all your credit card debt. If we can somehow, some way help you to save on a monthly basis and then show you how to apply extra each and every month to your mortgage payment to get your equity back, we can get your equity back in probably 5-6 years, where if you were to continue on the path that you're on right now, you're never going to have your debt paid off, and you're just going to be, in a sinking ship. So let us show you how we can do it and make it work.
Fair enough. 248-539-9797. It's the Hardcore Mortgage Show. Keep it here on 97.1 The Ticket. We'll be right back. All righty, welcome back to the show. It's a Hardcore Mortgage Show brought to you by Capital Mortgage Funding. We're in our 23rd year here doing the Hardcore Mortgage Show. Again, we take all your calls live. If you'd like to ticket text us, same number, 248-539-9797. I'm Harvey Freed, Harry Glanz, John Kolb in the middle of the state up there. We're going to talk about second home, Johns, and vacation homes also in this segment, so be sure to give us a call. And, of course, Kyle Lane joins us from RE/MAX Northville Properties, the Dream Properties out there, and it's a wonderful office. And Northville's been a hot area, so your surrounding areas. Keep going west. I went out there, and I'm telling you, there's some new construction that's really worthy. You go just west of you got South Lyon, or take Pontiac Trail, headed out to Salem Township. I'm a buyer out there. I love it.
So much development. And it's also what you're seeing is a lot of people that have been there for a little while, or maybe in their starter homes that bought houses that were built in the 70s, 80s.
Yeah.
Those houses are starting to hit the market as well because they're looking to build and upgrade to a little bit bigger home in the same community.
Well, we take all your calls here again, 248-539-9797. John Kolb, I want to go into the second homes. Sometimes we don't always say things that everyone wants to hear, but the cost of buying that vacation home, although Fannie Mae and Freddie Mac, and of course, the loan limits have went up to $647,200. John, all great news, but buying a home, a second home, a vacation home with maybe just 10% down, we've got these new adjustments out there, and the government's still trying to get a little bit of money back on them.
Yeah, yeah, you got to be cognizant of what really goes into purchasing a second home. Yeah, there's a little bump that Fannie Mae, Freddie Mac are trying to take back to earn some more money. Hopefully that we can fight that through all the different associations to try to get that given back. But even so, it's not that big of a bump. It's just a little fee that you have to pay, or a slightly higher interest rate. But yeah, like you were saying, Harvey, you can get it into a second home with as little as 10% down. And it just makes a ton of sense if that's something that you and your family can take advantage of. Someplace you can go a couple hours away, get away, and use on a regular basis. And it's the financing's not that hard. It's very similar rates to your primary mortgage. Costs are the same. So if you want to take a look at this, give us a call. We'll run the numbers. But once again, there's more to owning a second home than just what that monthly payment is each and every month. The maintenance and making sure that you know what you're getting yourself into. And we've got a number of people who are experts in that field that can run you through all those.
Yeah, because you have a second home, so you're an expert, John. I've never been there, but I heard that.
Well, Harry,
I had to get you. John, forget about it.
Limit down here.
There you go. It's about time. I mean, I got you 2 or 3 times already without you even saying a word to me. Wake up, bro. You're supposed to, you're supposed to shtick me.
It's different I can't see anybody. I'm looking at the ticket Zoom. I'm the only person on Zoom. I'm watching myself.
All right, there you go. Let's get back to the show,
I don't like looking at myself.
John, you mentioned it, though, just a little bump. They call them LLPAs, loan level pricing adjustments. Now, they've been out there forever. Again, there's different loan to values when someone wants to enter into a second home or a vacation home. Again, this could be a little bit different than investment property.
But, Harvey, there's a reason for that, okay? The Federal Housing Finance Agency is raising the fees that they charge the agencies. Now, get a little mortgage nerdy, but there's a why in here. The why is that second homes are more risky to lend on than primary residence. Why? Because it's obvious. You don't live there all year round.
It's not a priority to you.
Exactly. So if you decide, if something goes upside down and you decide not to make a payment, when I say as a borrower, if I decide not to make a payment, what am I not going to make a payment on? My primary residence, where me and my family live all year round, or my second home? So what they're doing is they're taking advantage of an opportunity because people are buying second homes, third homes in record numbers now because of the pandemic. So this is their way of equalizing things and saying, we're just going to charge a little more for it. Yep. What are you going to do? Not buy it?
Exactly.
So they're taking advantage of it, and that's the reason why.
Right. Definitely protect themselves. Again, we don't ever want to see anyone lose a property out there. That's really good, Harry.
Thank you, Harry, for that.
The HPSI, the Home Purchase Sentiment Index. I mean, this is a constant thing. Every month, they're always asking Kyle. They go out there and they do these panels, and they say, is it a good time to buy? Is it a good time to sell? Well, we know it's a great time to sell. The problem is, Kyle, a lot of our sellers out there, they need to buy a house also. Sure. How are we troubleshooting that? And, right now, is this a time frame where if you are a buyer, get your offer accepted, because that seller might say, hey, it's fine, I'll accept your offer contingent upon me finding that next house?
Yep, we see that happening, or a lot of times, too, we'll just see, they're needing 60 days of occupancy. You're pushing closing dates back, right? I mean, you guys are used to agents being down your neck, hey, when can we close this thing as soon as possible, versus hey, let's actually take the 45-day close, give us that extra 15 days to try to find a place.
Perfect.
And then start that occupancy clock
Perfect.
a little bit later, you know.
We like that. That's the reason. There's no hurry right now that somebody should be pushing to close. Okay, the whole push to close thing is overrated in my opinion.
I want to
do
share
it,
this.
but I'm just saying it's overrated.
Oh, 100%. But so I want to share this because people don't realize this. I explain this to people, and there are even people that have bought 2, 3, 4 homes, and it's just something that you forget. When you buy a house, you skip a month on your mortgage payment. So if you close on January 31st, you're going to make a mortgage payment on March 1st. If you close on February 2nd, you're not making a payment till April 1st, guys. So sometimes it's okay to wait those few days to buy yourself a little bit extra time, especially because you probably just spent a majority of your money on that down payment.
Yeah, and once again, the reason for that is interest is paid in arrears. So you're paying February's interest March 1st. So I'm sorry, April 1st. So if you close February, you're paying on April 1. If you close January 31st, you're paying March 1st.
The old interest adjustment and money to work with when you're closing on a property, and how important it is to really just sit back and really go over those conversations. You know, I'm working with some very interesting people to start 2022 off. I've got some really great buyers that are all sponges. Everything we say is a learning experience. We're talking it through. Then I've got some know-it-alls out there, and I'm going to a little shout out there. It is the Hardcore Mortgage Real Estate Business Show. I'm a little afraid, and I've heard some.
He was so aggravated yesterday.
I once in a while get these weird things. And, you know, I had a guy, for example, and I think you might like this, Kyle, as a real estate agent. I'm over there fighting real estate agents' rights. A guy calls me up and he says, Harvey, I've got this house and it's Livingston County. It's going to be $140,000. Oh, but I'm not going to hire a real estate agent. I'm going to have my uncle, a real estate attorney, and he's going to handle it. And I said, well, that's not a good idea. So, you know, I really want to drive it through. I really referred it out to an agent yesterday and said, call this guy. I can't talk sense into him. But, Kyle, there's no doubt that a real estate agent can stage the house, hold the open house, drive the price up, maximize the amount of money you're going to net from the sale.
I just had this happen earlier this week. I had a past client of mine. He had bought a house in Ferndale earlier this year. He reached out to me. He said, hey, do you know any good real estate attorneys? And I'm thinking to myself, first off, I'm not an attorney, but I was like, I don't, but what's up? He said, well, a friend of mine that I work with, his dad just passed away, and he wants to talk to a real estate attorney. I said, all right, is an estate set up? Is there any sort of trust? Yeah, he's the executor. He's an only child. I said, he probably doesn't need to talk to a real estate attorney. Tell him just give me a call, and we can get the ball rolling for him. There's so many things that it's not necessary for them to get involved in. And I don't know why people seek the advice all the time.
But also, they could be leaving money on the table. They think they're saving money. And in this market, you could be leaving a lot of money on the table. So don't be nickel-wise and dollar-foolish.
Honestly,
okay?
For all the FSBOs that are out there, the first thing we do as agents in super competitive markets, I'm going to go online and I'm going to say, where's there a FSBO that's been sitting for a little bit? Because that's what I'm going to go try to pick on first versus going into the MLS and going to fight over the same house with 30 different offers.
I've had some interesting things happen to start the year off, but again, it'll all work its way out through
Everyone's
2022. Everyone's an expert at an industry. Hey, Harry, just because it says head coach, he might not be the best coach ever.
Just because it says head coach next to your name doesn't mean you're a really good head coach.
Right. You might be a pretty good head coach, though. You could be.
It doesn't mean you're a bad one either.
Fair enough. 248-539-9797. We don't take any bad questions here. We want to hear what you got to say. 248-539-9797. Again, home buying season is off and running here in Michigan. The weather's not going to prevent anyone from not doing it. But you got this small window here, maybe this 2-month window before that real spring rushes. And I feel like it is going to come this year. I feel as if a lot of young buyers we spoke about, in the millennials, they have been accounting for over 30% of the sales, the highest group, segment of buyers out there is these buyers somewhere between 24 and let's say 38 years old. They're going to continue buying.
Yeah, well, and they're going to need to sell too, and that's what's going to really help the market. Is you're going to see the first-time home buyer market's going to see a nice influx of houses. That's going to help, previous generation, and then they're going to be buying up and moving out.
We got tons of sports here all day on 97.1 The Ticket. But first, we got to take care of your man cave because I'll tell you, Harry, I'm excited again. We got the NFL's kicking. Although our beloved Detroit Lions aren't going to be in it this year. We're sort of used to that. Maybe next year.
Well, there's always next year.
There's always next year. And again, we got some great games coming up. Again, keep it here on The Ticket. We got Red Wing hockey. We got Pistons basketball. So again, keep it here all day long on 97.1 The Ticket.
Well, if you ask Stoney, this year, he said, this year, he was expecting them to win 3 games. He was happy with that. He was good. He might not use the word happy. I don't want to put words in his mouth, but he was okay with it.
John Kolb, Another thing that we got going on out there is, of course, we increased this loan limit here. We are lucky enough, Fannie Mae and the agencies have increased the loan limit to $647,200. John, it's really opened up some great opportunities, but also our jumbo mortgages. So again, anything borrowed over that amount is considered, they call it a jumbo loan. But John, the truth is, they're to us, those loans close in 30 days also. So if you want to buy a $700,000-$800,000 house, you could still get into these jumbo programs with not quite always 20% down. It appears that we have some 10% down programs and opportunities.
Yeah, the jumbo market is still a great market, a great avenue for a lot of people. And yes, you don't have to put 20% down on a jumbo loan. If you've got the credit score, you've got the previous mortgage history, you can get yourself into a jumbo loan with us, 10% down and no mortgage insurance. So there's some great products out there in the jumbo market. Of course, the underwrite's a little bit more strict than it will be for the conventional guidelines, but you got to expect that if you're going to be buying something close to $1 million, that you're going to take a look at it a little bit deeper and ask a few more questions. But that's okay. We do our homework on the front end. We prep you for that, and we make sure that you understand what we're going to need in order to get this transaction done quickly, easily, and without any hiccups.
Kyle, we always like the first step for a lot of first-time home buyers, really to reach out to a lender that has experience and really could talk the whole transaction through. So when we sit down or I sit down with somebody, I always see, hey, first of all, of course, you got the credit component. Then you've got how much money and how much they're going to qualify for. Now they really want to dig in deep and find out, what they can do to become homeowners. It's just the way to go. Without home ownership, you're never going to create any wealth. You're never going to build any equity. Your lifestyle, not so good. You can't paint the walls. And you lose that sense of community. The truth is, if you're going to be a young family and you're settled down, you're getting married, you and I know a whole bunch of young people that got married recently. They're starting to have babies and all of this. When we come back, let's talk about that sense of community, how important it is to get that roof over your head. 248-539-9797. We'll be right back. All righty, welcome back to the show. 9:29. Is that sun peeking out? It's gorgeous day out here in sunny, cold Michigan. That's okay.
There's a huge difference when you wake up and you walk the dog and it's 7 degrees out.
Yeah.
But it's sunny and
Game
it's
changer.
calm. It's cool, but it's a great day out. Difference between that and 25, the wind's blowing, the wind chill's 15 below. But it's beautiful outside. Everybody go out and enjoy it. It's fun outside. Go out and buy a house, right, Kyle?
Why not?
Kyle, we're tougher here in Michigan. We know weather schmether. We don't care. Hey, get out the snowmobiles.
I don't complain about the cold because I like to complain about the heat in the summer. So you'll never hear me complain about
Don't complain about anything, right? Hey, we talked about first-time home buyers, and there's some great opportunities out there. Lower-income families still qualify for the MSHDA program. Michigan State Housing Development Authority has 236, I wrote it down actually, 236 zip codes in Michigan. The state will give you $10,000 to purchase a house. That's amazing. And then $7,500 in other zip codes. Now, that's a $224,000 purchase price maximum to qualify for that program. There's some other things, Kyle, but that's a good starter home. Yeah,
For sure, yeah. Did the 10,000 just come back this week? Because I just got an email from someone.
No,
about
it's
that
been
recently.
out there for a couple months now. But yeah.
Okay, yeah, because I know it comes and goes. It's,
Right.
The 7,500 is always there, but yeah, I mean, it's one of those programs that it's awesome to look into, right? That's the thing I love most about working with you guys and working with John is you guys aren't a one size fits all, right? You're going to say, all right, let's get you pre-approved. Let's look at all your options. And then we're going to weigh out each program here and what's going to be the most beneficial for you, both financially and in terms of getting your offer accepted. So MSHDA is a great thing to take advantage of, but it's not always the only thing to take advantage of.
Yeah, I want to give a shout out, and you mentioned John Kolb. John Kolb's been with us now going on, it'll be 25 years. I like to give a shout out to you, John, because again, you and Becky Alley, along with Harvey Freed, other people in our office, but you and Becky this year, again, for 2021 are in the top 1% of all originators in the country, John. Congratulations to you. Congratulations to Becky. Harvey Freed going on 23 years of being the host of the award-winning Hardcore Mortgage Real Estate Business Show. We want to give a shout-out to Harvey. And Kyle Lang, who is Kyle is a broker owner of a RE/MAX office, and Kyle is, I hate to say it, Kyle, you're 30 years old. That's phenomenal. Congratulations,
we've
everybody
actually
out
got
there.
2 locations. We like to plug the Northville one a lot, but we're in Livonia as well. So we're servicing, like Harvey says all the time, the Tri-County area, but really anywhere in Southeast Michigan, we can get you guys hooked up.
Yeah, you guys will drive anywhere.
That's it for the shout-outs right this second, everybody.
All right. 248-539-9797. We got John Kolb out there in the middle of the stage. We want to include John in the conversation as we continue on. John, we had talked about, of course, the jumbo mortgages. We're talking about some second home financing, refinancing. Let's talk about it again. Mortgage rates prior to the pandemic, they were higher than they are today. So these great opportunities, John, let's just really go there with the rate and term refinance, get a lower interest rate, and drop your term.
Yeah, I mean, dropping the term is such a key component to making a refinance make sense, right? Of course, we want to help you save money on a monthly basis as well, but we always hate having to start that 30-year term over again if we don't have to. So if there's a way for us to jump into a 25-year mortgage, a 20-year mortgage, a 15-year mortgage, where the rates just get better as the term shortens, of course the payment's going to be a little bit more, but if you look at the savings over the life of the loan, it just makes sense.
Yeah, it's about saving people money and doing the right thing, John. So if we're saving people money and doing the right thing by them, it's going to save them money in the long run. And, I love it when I see all these offers coming in. I can't tell you how many I get to my house via mail, how many I'm getting text to me, how many I'm getting spammed in my email. It's the craziest thing, but there's always a catch. All right? The rate isn't going to be $199 unless you pay $15,000 to get $199. It doesn't make sense. So that's why you'll always hear our mantra is you got to do the math. You got to sit down. You got to have somebody do the math for you, and then we go over your goals and objectives. Are you going to be in the house 2 to 4 years? Or are you going to be in the house 5 to 10 years, or for a lifetime? So it all makes sense once you put that equation together, and there's a formula to it, and then we see how much money we can save you. It's about setting you up for success and saving you money. That's it. Save the money.
There's so much more to this than just interest rate, and that's one thing that John does a great job of is once someone brings up, well, what's the rate going to be? Listen, the rate, it's a factor, but it's not the only thing that goes into what you're doing here.
Yeah, especially you can save money again. And we've seen some whole bunch of different interesting things. I had a purchase agreement last week. That was just a disaster. We had to fix it up. The deal had to get back down, then brought back up on the table. And now it's going to work for the buyer and the seller. And I'm sure the seller is going to be very happy to know that he had a transaction that's now moving forward where he's going to be able to sell it in a timely fashion. Some weird things, too, about sellers. We'll jump in on that. What are you going to say?
Well, I was going to say, that's what, when you're a seller, right? When you're listing a house, and let's say you've got a Pottery Barn catalog looking house, and you listen it, it's going to be the hot thing for about 3 or 4 days. But once you accept that offer, you're married to that offer. So make sure you do your research on that offer, because the worst thing you want to do is accept an offer that you didn't do your due diligence on. Come to find out, the program that they're working with doesn't work. They just got a pre-qual letter instead of a pre-approval letter.
Yeah.
Things like that. You want to make sure that you're checking every box, because you don't want to have to put this house back on the market or pick up the phone and call these other buyer's agents that you didn't accept their offer for, because everyone's going to say, what's wrong? What happened with the house? How'd the inspection go? All those things.
Let's go with this real quick, too. DocuSign is a legitimate signature nowadays. There's a way to electronically sign. Buyers are really loving it, because if you have a competitive marketplace where you're hard to get an offer accepted, you can't wait to have your mom and your dad and everyone look at this house, get the offer in, and that DocuSign's been a great way to go have signed documents over to a listing agent, get that offer in.
Yep, absolutely. And it's so much of it is going to be, from a listing agent's perspective, you're going to want to work with a buyer's agent that knows what they're doing, can get you stuff in a timely fashion, and not going to keep you waiting for 3-4 hours when you ask them a question. So if you work with an agent, align yourself with an agent and a loan officer that work effectively and quickly, it's going to help you so much in this process.
last week on the show, we had Lisa Niederlander. Harvey brought Lisa from Maxbrook on. Excellent agent. She's very well prepared. And we were talking about the contingency factor. What are the contingencies? What are the popular contingencies and what we're seeing? Okay, never waive an inspection. That's always been my mantra. It will always be. You can have a pass-fail inspection. You'll explain that in a second. But also, the contingencies seem to be getting a little bit, when I say less restrictive, they're not as hard anymore, and they're more favorable to both parties. It's a win-win for both parties. Explain a pass-fail inspection again, as opposed to an inspection that you want to go renegotiate.
Yeah, so essentially on the pass-fail inspection, if you're I'm not a buyer's agent that likes to do those, just because it's still, the buyer still reserves the right to back out. But on a pass-fail, it's basically you're letting the seller know, listen, we're going to come in. We just want to make sure everything is structurally sound with the house. There's nothing major going on. If there is, we're out. We're not going to ask you for anything.
Right. If there is, we could either A, leave, or B, we can go ahead and accept it, and we're not going to go ahead and try to renegotiate the situation, correct?
Exactly.
All right, good.
All right, 248-539-9797. We're all to ticket text here, which is sort of interesting. This used to come up quite a bit. Back in the day, the market was different than it is right now. And this is really the question. I got to sort of paraphrase it. Came over in a couple different texts. But what this ticket text is, it's buyers. If he's a buyer, he's reaching out. He's asking the question, or she's asking the question. If I work directly with the listing agent, is that going to be a better path for me? So in other words, I have direct communication with the one person who's between the seller, is that listing agent. But how is that going to benefit them if they can't really have anyone representing them?
You know who that's the best for? Who? The listing agent.
Go ahead, John.
It's not for the buyer. Go ahead.
It's not.
No.
Go ahead, John.
Oh, yeah, I was going to say, no. I mean, you got to have your own representation. You got to be someone there that's looking out for your best interest. And having, don't get me wrong. If Kyle was a dual agent, he's going to be doing what's best for all parties. But at the same point, you just got to make sure that you're protected. And I would honestly say, no, get your own agent. Just like trying to sell a house on your own, you're just going to miss some opportunities. You're going to miss some little things that are going to come back and bite you in the butt.
Aren't they really asking that question, John, Kyle, and Harvey, because they think they can save money because the realtor's going to take less, therefore maybe they can get a drop in the sales price? Isn't that really what they're asking?
I mean, here, $10,000
Yes. I'll go, yes,
it is. In a mortgage is only going to be $42 a month. So, and I'm not just going to say only $42.
Better in my pocket.
But, there's a peace of mind knowing that you've got somebody on your side and making sure you're getting yourself into a good situation. And what happens if you go in and on that offer and somehow, some way, the house isn't really worth it? Who's negotiating on your behalf? Are you negotiating? Is that one agent negotiating for the seller? Or is it for the buyer?
Right. As a listing agent, your fiduciary is always going to be to the seller. So you're basically going to tell that buyer whatever. I mean, you're going to follow the rules. We have a code of ethics that we need to stand by, but you're going to do whatever you need to do to get the best offer for your seller.
And I want somebody on my team. Okay,
100%.
I've got my attorney, I've got my accountant, I've got my realtor, I've got my mortgage person, I've got my inspector, I've got my well and septic engineer. I've got the guy that puts the
Got 'em
camera
all.
down. I got the guy that goes ahead and puts the camera down the sewer, right?
Yeah,
Takes
sewer
a look
line
at
inspection,
Harvey.
sure.
So I want to build my team, build my bench, so I have the best shot at knowing what's going on in that transaction.
If you're using a mortgage and you're obviously you're going to work with a loan officer that you trust, that loan officer has an agent that they've worked with in the past that they trust. So much of our industry is reputation based.
Right.
And if we take advantage, or if someone even perceives us as taking advantage of them, that's going to negatively affect our business, right? If you're working with someone that you trust them to point you and team you up with someone else that's going to do a good job.
Yeah,
for
you got to understand your due diligence, and all those condo buyers out there definitely want to get in touch with maybe the master deed and bylaws, find out what the rules are on fencing. And this goes in any site condominium too. Again, do some driving around. If you check it out, I lived in a subdivision once where they only allowed those the rainbow type style playground sets for the children. There was none of the aluminum ones. You couldn't go to the old Toys R Us and those places and buy those type of aluminum rusty old ones. And we used to see those a lot. You guys, I don't know, in the 70s and 80s, they were rusting out in people's backyards. But of course, the newer Morris Tech. Go ahead.
Those were shiny in the 50s.
Yeah, thanks, John. All right, so I was going to say, you guys, remember the swing sets that you go over somebody's house and you'd swing so high that the post would come out of the ground?
Oh, yeah, make that huge noise.
And you thought that you were going to tip over? John, you wouldn't remember that because you weren't really outside. You were probably playing video games.
Oh, yeah. I'm a video guy, sure.
Video games. Yep, video games.
Home ownership, a lot of fun. Give us a call, 248-539-9797. Again, the Hardcore Mortgage Show in our 23rd year. Call us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Get that serious professional team behind you. We come back, we'll talk about a whole bunch of stuff. Keep it here. All righty, we are back. Always talking about home ownership and keeping the house up. You know, you got a budget, Kyle Lang from Remax Dream Properties. You got to budget a little bit for home improvements down the road. Here we're talking about
hot water
tanks and things that can go wrong with the house. We talk about these inspections. And, you know, I mentioned I called my cousin to check it out. I'm no names here. He bought a house, loves it. Everything's great. Something's a little funky in the house. Every house, Kyle, has something a little funky.
Nothing is perfect. New construction, 100 years old, nothing's going to be perfect. There's going to be something, but that's why you need to make sure you're working with a team of people that can show you that. We were just talking about hot water tanks before we came back from the break. So you're telling me right now, if you think the hot water tank's getting ready to go out of the house, you're not going to have the $1,000 sometimes down the road to replace the hot water tank. If the house checks every other box for you,
right,
but you're worried about your hot water tank,
right.
What are we doing here? Right? You don't want to.
Why are you looking for a home?
Exactly.
They're really well said. But that used to scare people. Harvey, I can't buy that house. The roof's not going to pass inspection. That's $10,000 or $14,000. If you don't have that kind of money, you're probably not a buyer in today's market.
Just had a closing last month that we were at the inspection, and the buyer's parents were kind enough to come along and hang out with us for the inspection. And the wife said, "Oh, like we're worried about the age of the roof here," and the dad said, if the house needs a new roof, it's going to need a new roof. It's not going to affect, you're in the area you want to be. You love everything else about the house. Put a new roof on the house down the road.
Needs a new roof. You'll have a nice new roof on the house and insulated and the newest.
If you ever go to sell it, you can use that as a marketing thing for you. Is you got a new roof that you put on the house in 2022.
Had that down in Florida, actually, too. Again, a condominium, a buddy buying one down there, built in 2006. It's just about getting to that point where the hot water heater and things like that that's normal, home things that will depreciate in a house. Yeah, those are the things, the normal maintenance to keep a house moving in the right direction. Again, we got some time to take your calls, 248-539-9797. Harry, we always want to drop in Mike Tomczyk, one of the appraisers that we have on the show, quite often Paramount Appraisals. He is really well known in the Tri-County areas, one of the best out there. You know, he talks and gives us his perspective on where values are here. Sometimes, yes, people just might want to overpay for a house because it has the redone kitchen and bathroom.
Yeah, an appraiser like Mike Tomczyk, most appraisers, Mike's from Paramount Appraisal Company, and it goes like this for Mike and for anybody. He'll do a very detailed report, okay? And now, understand that appraisers take their work very seriously, and they think they're Rembrandt. They think they're painting here, okay? So when you question them, and you can question them, I can't question them based on it. Value, but there is a rebuttal process. They take it extremely personally, and that's why they're so buttoned up. If you go ahead and you buy a house for $225,000, if the house is listed for $215,000 and you want to pay $10,000 over, that's okay. But Mike and other appraisers might only bring it in for $215,000. Now, as Kyle mentioned during the break, if you want to go ahead and you want to overpay, there's no big deal about overpaying. What if the house has an updated kitchen, Kyle, or it has an updated basement, or it has the amenities that you want, and it's a lifestyle purchase? There's nothing wrong with that, and you're probably seeing that a lot in this market.
100%. I say to my buyers all the time, if you're getting a house where you don't have to do anything, it's the have to get to model. I use have to get to for everything in my life, where you don't have to do anything. But if you wanted to paint the kitchen, if you wanted to update the flooring in the bathroom, just because it was something that you liked, that's fine. But we can't hold that against the seller because you don't like the color of tile that they have on the bathroom floor. If it's a nice new tile on the floor, that's the value that they're going to use it for.
Right. So, John, we talk about home values all the time in appraisals. Right now, within the purchase agreements that we're seeing and everything, we're seeing less than 2% of people that want to go ahead and question the value on an appraisal. Now, I just jinxed it for everybody out there. I'm just telling you that.
That is the jinx.
Here it comes.
Right. So because the values of in the fall and in the wintertime, that's the comps, the comparables that people are using, the appraisers are using, and when you buy a house, to comp that house out to the house that you're buying right this second. So it's an advantageous situation for everybody involved. You're going to get a value, but also the seller's going to get a value as well.
Yeah, check yourself at the door. All right, here's the tough part. The Hardcore Mortgage Show always has a little bit of hardcore information. This is Harvey Freed telling you, so you can pick on me here if they call us at the office. Look, folks, if you're listening to the show, honest to God, get with Capital Mortgage Funding, 1-800-LOW-RATE. That's 1-800-569-7283. Start getting more qualified people in your life. If you're asking your lender. The only question is, what's the interest rate? You're not on the right path. So that's the number one thing that you're going to leave here today. Here we are, January 15th. We're going to start the year off right. Again, don't call up a lender and tell us that you are looking for the best rate with your 620 credit score. You need the best information is what you need, and there's a lot more to the picture. I got a ticket text here asking, who do we like in a football game? That will be coming up at 10 o'clock. We got Pat Caputo coming up with sports and a whole lot more.
I think I know who that is.
We're going to get, no, I don't know who that one is. But Harry, let's dive in.
He knows I like Matt Stafford. That's okay.
Oh, it's not
he
that
knows
game.
I like Stafford.
All right, let's go there real quick. On the Hardcore Mortgage Show, we want to dip into self-employed families out there. Again, business owners, you own a business. Look, this is real stuff. Sit down with you. Make this the year. You sit down with your CPA and you understand what he's putting together or she's putting together. Harry, so many self-employed people, you know, the number, I always ask the question, like, oh, great. So what type of income have you shown? What is your adjusted gross income? Harry, they don't have a real clear grip on that stuff. I'm sort of shocked.
So they're buying a house in the spring. So, and you're self-employed. So what we're going to need is we're going to need you to file your income taxes so we can see your 2021 income with all of your schedules.
There you go.
And we're going to need the year-end P&L. And we're going to need an updated profit and loss through first quarter if you're doing it in May or June. Sure. But we're going to need an updated income statement from you if you're self-employed. So there's a lot that goes into it. So 2021 tax return, give me all the schedules. Go and give me the 20s, of course. Get me a year-to-date profit and loss. We'll go ahead and we'll determine. That will help us determine what your income is. So it's not just, you can't just say, hey, listen, ready? Here's the famous line. I make more money than I show. Okay, you never tell a mortgage person.
Well, we already knew that.
John Kolb, do you ever tell a mortgage person, hey, listen, I make more money than I show?
Yeah, I mean, that's the catch-22, right? You can write off as much as you want, but if you want to buy that big old home, you're just not going to qualify for it if you don't show the right amount of income. So this is a perfect time of year for to do some planning, right? And to give us a call and let us tell you, hey, this is what we need in terms of income for you to qualify for that home that you're interested in. And, you know, I'm not saying, you know, manipulate tax returns or anything like that, but I'm just telling you how the numbers shake out. If you want to qualify for this home with your current debt load, here's what your income needs to be in order to get you qualified based on what your 2020 tax return showed. And, you know, that's just smart planning, right? And we've done it a number of times to make sure that people are kind of showing what they need to show. And yeah, you're going to pay a little bit more in taxes. But if you want that house, that's just something that you're going to have to pony up and do.
Well, like you said, proper planning. Definitely. Again, you might have had a great year if you're 1099, if you own 25% more of a company, Schedule C. This is your income. Get that plan together now and go ahead and sit down with the CPA. If you had a great year in 2021, well, fantastic. Get the tax returns done, then get them submitted. That way we can use your 2021 income versus waiting here all the way through next October. Well, you're not going to be able to use that income. Well, yeah, it's so important.
If not, we use 2020, a year-to-date profit and loss through 21, and then just verify a couple things. I mean, I'd make it sound easy. This is not easy. Everybody wants to tell you it's easy. We'll make it easier.
Right, as easy as possible.
Yeah, we'll make it easier, but it's not easy.
John talked about planning, and so I would imagine planning means don't have mattress money to call you guys and say, well, I got $100,000 underneath my mattress, right? That's probably not a good part of the plan.
No, that's not a good one.
Yeah, that's what I thought.
You know, we actually get another one on that, is that they loan money out. Hey, look, last year I loaned money out to my family member, blah, blah. All of a sudden now, just in the last 2 weeks, all of a sudden they're going to pay me back. Get that money paid back. Let that money season in your account so that there's no questions the underwriter is going to see large deposits. John Kolb, we're getting up to the end of the show. Go ahead, sir.
Hey, you know, like we said, let's just do some smart planning. Give us a call. Let's talk about what your goals are, and we can let you know what we can do for you. You know, it's always better to have your credit run and your everything looked at prior to, because if there's anything you need to work on, credit, income, you know, even just getting your documents together. If it's not as easy for you to get your documents together, you might as well start sooner than not so that we can put you in a plan to get this done the right way. Put you in touch with Kyle so that you can start looking at homes slowly, and then when you've got everything all together, we ramp it up and get you in. So give us a call. It doesn't make any sense not to.
Kyle, if you had a wish for 2022 real estate, more of the same? I mean, will we just take more of the same what we've had the last couple of years?
I hope people really take the time to interview the professionals that they're working with and understand that we are not all created equal. I understand they've been your friend or a family member for a long time, but that doesn't mean they know what they're doing. So make sure you take the time to actually talk with and figure out who you're working with and make sure they can do a good job for you.
Hey, Harry, it's the first time ever that some of the real estate agents are starting to pick on the offers that are, the other agents. We don't do that anymore. No, I know. We don't. Just take it easy. Get more help in your transaction. If you're new and you might not know the next step, call your lead team, your manager. Call Kyle Lang over Remax Dream Properties in Northville. He'll get the professionals involved.
Yeah, we don't want realtor on realtor crime, Harvey. Just like we don't want, we don't want any of that. But you need to give people. You have to talk to people. I talk to people every day. I have a team that I talk to every day, very knowledgeable. I get their opinions, their advice from it. We have a mentor group that we go ahead and we talk every single day about what's going on in the market professionally and where we see things going. I mean, it's better to have a couple sets of eyes and ears, listening to people, taking good advice, and putting it to work for you every day.
As Harry mentioned earlier, it's a great day to go out and buy a house. Sun is shining. It's a little bit of cold out there, but with the sun out there, we are one of the lucky ones today because, boy, there's a major winter storm that's going to wallop the central and eastern part of the country. And, of course, we're just on the tippy top of that, and we don't have to worry about it. The other 48 states might have to.
That Buffalo game, that Buffalo-New England game.
There you go.
What's going to go on there? It's going to be cold, the Buffalo game.
We'll segue this show right into sports.
It's supposed to be played.
What's that? That's the way it's supposed to be played?
Yeah, for sure. In the snow, in the cold. I mean, Buffalo, New England. You want summertime? Come on.
Okay, there you go.
That's a man's sport right there.
There you go. So what do you say? You got the under?
I got the under. Yeah.
There you go.
We got another minute or so if you want to sneak in a phone call, 248-539-9797. Again, we got Pat Caputo coming up with sports next. Some families have reached out to us on Ticket Text. Again, the same phone number, 248-539-9797. A lot of families are still overpaying on their mortgage, sending additional money towards principal. That's a great path, and congratulations to all those very well financially planned and families that have it all figured out where they're going to build equity and pay down the principal. Again, the whole idea with the mortgage is that you pay it off one day.
Right.
So congratulations out there. But if your current rate is, per this Ticket Text, 4.5%, you probably have a great opportunity to knock that down, especially if you're sending extra money each month. Let's take a look at another 10 or 15-year fixed mortgage, Harry.
Yeah, why not? I think you got to pay it off, you got to pay it down, but we have to save you money, and it has to be right for you. Again, not all programs are built the same.
Nope.
All righty. For Kyle Lang, Remax Dream Properties, Harry Glanz, I'm Harvey Free. John Kolb in the middle of the state enjoying some up north. If you're out there taking a little ski trip or something, definitely check out up north. There's some great opportunities to buy properties. Keep it here on 97.1 The Tickets. We'll have sports the rest of the day.